The news just in, India's economy grew 8.4% in the September quarter. That beats Bloomberg's consensus of 8.3%. In the June quarter, GDP grew a record 20.1%, largely due to a low base effect last year. For a deep dive, we have with us Radhika Rao, a senior economist at DBS Bank from Singapore. Well, this number is better than consensus, as was your forecast of 8%. Radhika, what are your key takeaways?
Certainly a slight upside surprise. We were at 8, it's at 8.4%. I think there were a couple of drivers in this quarter which helped growth, by way of reopening gains, because India did face quite a devastating second wave of COVID, and thereafter the economy had begun to reopen. The government spending also stepped up quite sharply in the quarter. Many of the contact-intensive services also started to reopen. So I think there was that reopening boost that was seen, and I think that is behind the numbers that were there. Alongside the formal economy, there was also the rural sector, agricultural farm output, which also contributed to growth. So these were some of the main drivers that lifted growth. But I think as we go into the second quarter, base effects are going to get a bit unfavorable, so you might see the headline begin to gradually slow down. For the year, for the fiscal year that India follows, which is April to March, for the year ending March 22, we have a growth forecast of about 9.5%. So this number certainly adds to the confidence that number, our full year forecast, can be met and probably exceeded by a small margin.
And that's even as the world's attention is on Omicron. I mean, what would be its impact on India's growth for the rest of the FY and also next FY, since only 32% of India's population is fully vaccinated?
Certainly, I mean, this is a fresh threat for globally as well as India in particular. Details are very sketchy at this point, so everybody, I think all the national authorities are awaiting more clarity. But I think as a cautious gesture, most of them have, particularly for international travel, put up restrictions and subjecting incoming travelers to much more checks or quarantine where required. I think as of now, apart from general caution, which is disrupting market price action, particularly in the equity markets, the real economy impact has not been that, it's too early to say. But as we know more about the nature of the variant, I think it will be important to gauge the impact. I think going just quickly in the past two waves that the economy has seen, what you did see is that the first wave, the reaction to that was, there was a nationwide lockdown and which really hurt economic activity quite sharply. In the second wave, what you saw was there was more localized restrictions and the government, there was much more decentralized decision making. States were allowed to take calls according to what the situation was. I would think that assuming that this variant is also disruptive, not to the nature of Delta, but halfway there, I would think that there would still, the option would be to place more localized restrictions and try to screen people who have been infected, rather than go for essentially the bar to put wide-ranging lockdowns is very, very high given the economic costs. So I would think that, and I think I need to also add that the administrative capacity alongside improving vaccination rates are also expected to provide some kind of buffer as compared to the previous two waves. So yes, this is certainly a threat, and it's a bit too early to take a guess on what the exact impact would be. But I would think that going by the first two cycles, we don't think there'll be any draconian measures. So that's why we could see a shallower economic impact, though humanitarian costs are still to be seen.
And Radhika, even without Omicron, India is facing rising retail and wholesale inflation. So how will rising fuel prices affect the economy?
Certainly, inflation has been, quite sticky. In fact, it has been so even pre-pandemic. If you were to see data as back as October 2019, since then, inflation has consistently been above target. So that is, and I think the drivers keep changing, right? During the pandemic, there were supply shortages, so that was put some price pressure. Now it's more imported in terms of fuel as well as commodities, and India does import 80-85% of its oil consumption demand. So that's why that price pass-through can be seen quite significantly. It does impact a couple of things. I mean, it impacts inflation, like you mentioned. There is also a bit of, trade because the import bill grows. So you have a current account deficit that also widens. And then at this point, the government is in fact has placed quite a bit of fuel taxes on fuel excise duties on the fuel. So it is in a way the price rise has also added to revenues. But I would think just talking about inflation per se, certainly it's not a great thing, because just when discretionary, your income levels are getting better, if you do inflation adjusted means you will see that, you're not making much. So certainly a dampener on consumption. But the hope is that going into barring any particular, any COVID resurgence, there are some administrative steps that have been taken to, lower import duties on some other edible oils, make sure there's no stockpiling and all of that. Hopefully that will help. But certainly inflation being sticky is a source of concern, and especially if it hurts purchasing power.
Well, thanks for that, Radhika Rao there from DBS Bank.